Here on the Transparent FX Academy, every day I give you my best market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the forex market. So without further ado, let's jump straight to the charts and see which is today's forex pair. In today's video, I will be breaking down USDJPY. Now, why do I want to speak about USDJPY? Because at the moment we do have quite interesting price action on it. So as usual, I will be performing a complete top-down analysis, starting from the technical perspective, and then also checking out what we have when it comes to the commitment of traders, so COT data, which is what the non-commercials, so the biggest speculators in the market are doing. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for a potential opportunity on the pair. And as usual, I will be keeping this as educational as possible. Now, starting here from the monthly time frame, what we can see is that the market has just created a quite strong impulse to the upside. Now, in creating this impulse, the market has also broken above a quite important structure level. In fact, we can see how exactly from here the market had provided and created all this move to the downside. And since the market with this impulse broke above this structure, this previous monthly resistance, after it was broken to the upside, it was turned support here. And the market tested this previous resistance turned support, creating obviously the rejection to the upside and creating also this monthly higher high. Now, generally speaking, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market has retraced also to the 0.382 of the Fibonacci taken on this monthly impulse, which, by the way, is the first Fibonacci level to which you expect the market to provide a correction to, especially when you have a quite strong uptrend, like in this case. You expect the market at least to test the 0.382 before then creating a continuation to the upside. And in fact, we can see that is exactly what the market did. So here on the monthly, everything happened as you usually expect in this specific situation. Going down on the weekly time frame, what do we have? Now, here on the weekly time frame, we can see how the market has just broken several structure levels. In fact, we can see how this zone was acting as resistance here and again resistance here. And after the market broke above this zone, all this previous resistance was turned support here. And the market tested this previous resistance turned support and it rejected it to the upside. So here on the weekly time frame, everything seems quite bullish. And we did expect the market to print this higher high, breaking above also the previous weekly high that the market had here. So now that the market has also broken above this previous high here, this is a new level of previous resistance, which now that it is broken to the upside is turned support here. And we can expect the market to test this previous resistance turned support before then creating a rejection to the upside. So the monthly is bullish and the weekly is bullish as well, but we first expect a correction before the continuation to the upside. Just a quick thing, make sure that you leave a like and subscribe to the channel, and also let me know in the comments the topic for the next video that you will like. Going down on the daily time frame, what do we have? Now here in the daily, I had spoken about a USDJPY a few times in the past. I spoke about USDJPY after the market created this W formation here. When the market was at this level, I made a full breakdown explaining all the reasons for which we expected the market to provide the move back down to complete the pattern at this previous resistance turn support. And in fact, that is exactly what the market did. Then, after the correction, I made another breakdown explaining all the reasons for which we expected the market to provide this continuation to the upside. And again, that is exactly what the market did. And from here, after the market provided this correction, I made a new breakdown explaining all the reasons for which we expected the market to provide the continuation which the market is currently providing. And by the way, I will link in description all this previous analysis so you can go and check them out for further reference and more free education. Now, before I show you what we have at the moment from a structure perspective here on the daily, let's first go and see what we have when it comes to the commitment of traders. So what the biggest speculators and the non-commercials, so the big players in the market, are doing. Now, if we check here the COT data for the JPY, we can see how we went from having 50.5k net positions with 63k longs and 13k shorts, all the way down to having minus 53k net positions with 87k shorts and only 34k longs. So we went from having way more longs than shorts from an institutional perspective to having way more shorts than longs, which obviously makes the JPY quite weak, which makes USDJPY quite strong. And we can see this clearly reflected in the price action with this strong uptrend that is currently developing here. Now, if we have to identify the structure here on the daily, we can see that we have previous daily resistance, which, now that the market has broken it to the upside, is turned support here. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And we can see how the 0.32 and 50% of the Fibonacci's taken on this daily impulse are currently lining up with this previous resistance turned support, creating a confluence of support at this area that we do expect this market to test before a potential rejection to the upside, which means that this zone here is a quite good zone in which we can be looking for a potential longing opportunity. So the way in which we will be approaching USDJPY with students is as usual being reactive and not predictive. If the market will provide a correction back inside of this area, with students, we will be monitoring price action from a 4-hour perspective and lower. Now, why 4-hour and lower? Because the monthly, weekly, and daily, those are the best time frames when it comes to the directional aspect of the market. But when it comes to confirmations and entries, the best time frames are the 4-hour and the other intraday time frames. So after the break on the retest, inside of here, we will be monitoring price action with students from a 4-hour perspective and lower, waiting for the market to shift from an intraday bearish market, as we will have, to an intraday bullish market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding USDJPY to our watch list with students. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a good risk to reward and good probabilities at that point for the move to the upside and for the market to complete this impulse correction and impulse pattern to the upside, and for the market to provide and create a higher high. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free analysis, education, and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade the strategies with me. Every day you get the new daily market breakdown showing you how to apply the strategies with the entry, stops, and take profits. And you can also ask questions and get the answer the same day with the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.